first, let's talk about how you can work as a barber or as somebody from the beauty industry. Basically, as a worker, you could be a W-2 person, like an employee of a business, or you can be self-employed, like an independent contractor, okay? Most people in the beauty industry work as a self-employed. Not all of them. There are some people that work as an employee. So if there is a salon that's going to hire you to be their employee to do do the nails there, you could be a W-2 employee. In that case, you are going to be getting a salary amount. It could be per hour. There could be some commissions involved. There could be some bonuses, but it's all going to run through the payroll, where from the amount that you receive, you're going to be paying income taxes, and you're going to be paying your part of the Social Security and Medicare taxes. It's about 8% that goes to the Social Security and Medicare. And then the company that's hiring you, they're going to be paying the other half, about 8%, that also gets contributed to the Social Security and Medicare fund. Okay, so you're responsible for income tax, Social Security, and Medicare. In certain states, there's also state income tax and local income tax as well. Not the case here in Florida. So that's when you are an employee. Now, as an employee, you don't get to deduct any expenses that you had because you're working for another company. They're responsible with providing you with all the tools, all the equipment that you need, right? So you don't get to write off any expenses. You get paid a certain amount. There's the taxes that are already going to be withheld, and that's it. So it's a little bit simpler when you are a W-2. Now, from my experience, most people in the beauty industry work as independent contractors, right? So maybe they are renting out a chair in a barbershop, right? So, and then they buy their own supplies, right? They buy their own tools, equipment, right? So, in that case, the company that they're working for, they're running all of the back office information. So they're charging their clients, and then they're passing on the payment to the barber, okay? Or, to the nail salon person, or, So as a 1099, you are considered self-employed. So if you're working there, you're going to get a certain amount of income, which is the amount that the salon or the barbershop is going to be paying you. And then from that income, you get to deduct all of the expenses that you had to earn that income. What are some of those expenses? You can be paying rent to the salon to rent your chair, right? Could be a fixed amount, could be a percentage of the cuts that you do. That's going to depend on your arrangement with the salon. You also have supplies that you may purchase, right? So you may purchase like your own shaving cream or whatever. That's going to depend on the arrangement that you have with the place that you're working at, right? You also can have other expenses. You may need to use your telephone if you're dealing directly with your clients, right? So there are some applications for booking that you may need to pay. There's some advertising that you may have to do, right? So you may use social media to advertise your clients, your cuts, or whatever, to bring in more clients to you. So all of those expenses that you have, those are going to be deductible, right? And that's a good thing because you pay taxes on the profit, on whatever is left over. So you're going to have the income, and then you're going to have the expenses. And whatever is left over, that's the amount that you pay both the income taxes and what we call self-employment taxes. Okay, so as a self-employed individual, you're always going to be paying two types of taxes. You're paying the income taxes and the self-employed, just like the employee. Remember that I mentioned the employee, that they pay the income taxes and the Social Security and Medicare? Self-employment taxes is exactly that for the self-employed, the part that goes to Social Security and Medicare. But as a self-employed, you pay both portions. You pay the portion of the employee and the employer. So it's about 15% of the profit for your business goes towards self-employment taxes. And then you also pay income taxes. So one thing that it's important, as a self-employed, you get to deduct the expenses. Second point, you only pay taxes on the profit. Okay? So question is whether it's better for you to open a company or to just simply work under your personal name. Okay? I like advising clients to open their company just because if they are thinking in the long run, right? So they may want to get their name established. They may want to start building that history for their company. Maybe later down the road, if you are a barber today, maybe you want to open up your own shop. If you have a business already set up, you're already going to have that history, of having the business set up, let's say 5 years back. So once you do open up your own salon, you're already going to be looked at. Hey, so this guy's been in business for 6 years. Like, you're not just somebody that just opened right now. So that's the business factor that comes in. For tax purposes, if you open up an LLC and if you're the only owner of the LLC, you're going to be taxed exactly the same as if you were self-employed working under your name. So there aren't any or much tax benefits if you open up the LLC and if you're the only owner of it.
You still pay the
self-employment tax. Yep, you're going to pay exactly the same amount of taxes, okay? But it's going to be a separate legal entity. You're going to have your company, and then you're going to have yourself, okay? There are certain legal aspects to having a company, right? Which most of those are related to like lawsuits that could be put up against you, right? So as a self-employed or as a business owner, it could be that there is a lawsuit that's put against you. Maybe you're out there cutting someone's hair and you stick the scissors on their neck. Scary, right?
Or cut with a razor, yeah.
Or cut with a razor. But there could be a lawsuit that's against you or against your company. If you're doing the work, in theory, okay, if you're doing the work under your company name and somebody files a lawsuit, they're going to file the lawsuit against the company, not against you individually. So if you have other assets, in theory, since that lawsuit is not against you personally, it's against this LLC, only the assets that are under the LLC would be exposed to the lawsuits, okay? Of course, that this is more of a legal thing that you should be consulting with an attorney, but I like to give the basic idea behind it, okay? So there's that legal protection of having a company like a limited liability company, an LLC or DS corporation, because you get to separate the assets for the company than your assets personally, okay? As far as tax purposes, though, as an LLC, the LLC is the most common type for small businesses that are starting out. I like it because it can be very flexible. You can change it as you grow, okay? So you can start small and be an LLC being taxed as a sole proprietor or as a self-employed. So you start out like that. As the business is growing and you're earning more, and it could be that it's beneficial for you to maybe convert that LLC to be taxed as an S corporation, okay? So there are certain tax structures and legal structures. The legal structures are corporation, limited liability company. Those are the most common. Now, the way that those entities are taxed could be different. So an LLC could be taxed as a sole proprietor. It can be taxed as an S corporation. It could even be taxed as a C corporation. So it's very flexible. So as your business grows, you can change it up. So that's what I like about the LLC.
You can change how it's taxed. But let's say I have a C corporation.
Mm-hmm.
Then I don't have this protection on my assets if I get sued. Can I change to an LLC after I already open a C corp?
Okay, the corporation does offer that same protection. Okay, so as the limited liability company, the LLC, the S corp, and the C corp, they all offer that same type of legal protection, separation. So that wouldn't be an issue under the C corporation. Now, a C corporation normally can only be taxed as a C corporation or as an S corporation. They can't be taxed as an LLC. Okay, so now the LLC can go the other way. So that's why I like recommending clients to go that route, because you can, as your business grows and, things change, you can always be very flexible with that.
Can you add a partner to your LLC?
For sure. You can certainly add a partner to the LLC, and that becomes a partnership for tax purposes. So there would need a separate business tax return to be filed. Essentially, it's not going to be taxed much different, the amount of taxes that you pay, but it offers more flexibility on who is the partner that's running the business, who the partner that's just an investor. The investor, if they are a limited partner, then they won't have to pay the self-employment taxes since they aren't working, So there are certain nuances there, but the LLC certainly offers that flexibility for you to grow and add other partners, and yeah.
Okay.